Hi everyone, my name is Tetsuro Miyatake from Off Topic, and I'll be your moderator today. We're here today with Ken Wen, the CEO and founder of Republic. Ken is one of the leaders in the movement to democratize investing and has done incredible work building the infrastructure to allow anyone to participate as an investor. I've personally used Republic myself and can say from personal experience how easy it was to use. Republic has recently announced its $150 million Series B raise, and all signs indicate even more growth from here. Ken, welcome to TechCrunch Tokyo.
Thank you so much for having me, Tesoro. Such a pleasure and an honor to be here.
Awesome. Well, for those in the audience who don't know you and who don't know kind of the background of what Republic is, can you give a quick intro about yourself and what Republic does?
Absolutely. I started out as a securities litigator, an attorney, and I worked at a platform called AngelList after a short stint in academia at Stanford Law School and Stanford Business School. And AngelList was when Uber raised the very first $1 million. We call it crowdfunding for the rich. You got to be a millionaire to invest. So due to a legal change in 2016 that gave rise to Republic, allow me to define what we do at Republic. So Republic is an investment platform that is open to anyone and everyone. Doesn't matter how much your net worth or your income may be. We present deals, investment opportunities that hopefully meet your interest. So a wide variety of deals, including early stage startup, late stage startup like SpaceX. We do crypto, real estate, music financing, and so much more. The vision is to be that go-to place when anyone can invest in the same way and as easily as they buy things.
Incredible. And so in Japan, there is no definition of a accredited investor, so that anyone can technically invest in private companies. That is very different in the US, where you need to be an accredited investor. What is kind of the rules and regulations in the US to be an accredited investor?
Well, an accredited investor, a loose and vague definition is that you gotta be a millionaire. That is, you gotta be worth, without counting your primary home, at least $1 million US. Or if your income for the past couple of years is about $250,000 or $300,000 each year. So generally, people who are high net worth, with disposable income, and there's an assumption that US laws make that if you're rich enough, then you got to be able to know well about investing, and that's not true. I think really investing is for everyone, and everyone can do so smartly.
Yeah, and I think especially now with the rise with Robinhood, with other kind of companies that democratize investing and allow kind of retail investors to really come into the space, why just public markets, right? Why not private markets as well? I'm curious, Republic does a lot more than just retail investment and kind of crowd equity funding. What are kind of the other places where you help kind of democratize investing?
The way to look at it is that if people are passionate about a wide variety of things, from technology to music to movies to blockchain, they should be able to invest in as many things as they're excited about. So the major verticals on Republic today include, again, early stage tech companies. We have a residential real estate that anyone can invest using a credit card, investing $200, $300 into a home in New York City, as an example. We also allow people to invest in video games. If the video game does well, a portion of that revenue gets sent back to investor. We recently launched music financing, the very first time ever that you can invest in a new song. And if the song gets very popular, you have more money back. So it's going to be, there are going to be a lot more investment products and verticals that we will present over time. Our goal, again, is to make sure that if you're interested in something, you're going to find it on Republic to invest in.
I love that. And I think, the different verticals that you have kind of gone into, it really kind of epitomizes what the kind of retail investing landscape is today in the US, where a lot more people are interested in investing in culture, in real estate, in stocks, in NFTs, and blockchain. So congrats on building that infrastructure. I'm curious. Let's talk a little bit about the market landscape here. Obviously, alternative investing and alternative financing has increased in the U.S. It's been crazy growth. What are some of the factors? I think you mentioned some of the regulatory changes, but in general, what are some of the other factors that have led to kind of this rise?
To look at the trend towards ownership, and I think there's a term coined in the US, they call it the ownership economy.
Hmm.
It's not even investing. Like people wanna, when you invest in something, you obviously expect to make a lot of money out of it. But in many cases, people just wanna have a stake in it so that they can share in that success. It can be $5, it can be $10, or it can be a lot. So that rise of ownership economy, I think, is due to the young populations believing very much that their money matters and that they care about the world around them. So if you care in something, you want to share in its success. So we call it, the technical term, retail penetration or retail revolution. And you're going to see the private market or aspect of the market, private market, get democratized.
Mm.
But separately, you're also going to see new investment products that had never existed before. Certainly not for retail, but NFTs is a good example. Right now it is an investment product and it's practically brand new. But I think it's not going to be the last. Certainly there will be many more of these variations to come.
I love how you mentioned kind of this new kind of investment products kind of rising up. I think we saw with Otis Rally this kind of new kind of cultural objects being kind of being able to invest in, and then we've seen kind of a lot of the NFT technology with Mirror, with all these kind of products allowing digital assets to be kind of the ownership economy there, I think, is incredible. I'm curious, like there's also another side of this alternative financing where companies like Pipe or Clearco, companies I think you're very close to, have this kind of revenue-based financing, which is also, I think, changing the landscape. Can you talk a little bit about kind of what you've seen there?
You touch on, I think, is such another important trend in the private markets, which is for companies, for entrepreneurs. There are more and more ways to get themselves financed. It used to be just either debt or equity investing. Then you have venture debt. Then you have retail investing. Then you have kind of like the revenue sharing, or based on how much money, on how robust your business is, there are different avenue for you to get yourself financed. And I think the Clearco of the world is such an example. I'm a huge fan of what Michelle and her co-founder have built at Clearco. But I do think that the world in getting entrepreneurs capitalized so that they can build successful companies is indeed in its heyday. It's just getting so much easier compared even to just 10 years ago.
Yeah, and I think they're targeting different groups, right? One is targeting B2B and kind of more companies, and one is targeting kind of more individuals. But at the same time, they're both about ownership, and they're both about how much stake you want to have in this business. Because what Clearco and Pipe does is it allows founders to really keep their equity holdings, right, into their companies and not kind of let go. And then on the other side, you see kind of individuals who have ownership. They want to share, as you mentioned, right? Because they're part of this company, they feel a lot more committed. There's a higher switching cost now, and I think that is kind of an incredible factor. What you'll see kind of this change in kind of Web 2 to Web 3 in terms of marketing as well.
Absolutely. And I think it's the kind of like the rise of entrepreneurship. I call it entrepreneurship as a shared economy, in that any stakeholder in a company's journey or part of a community should be able to be a shareholder as well. So it may be employees, it can be investor, advisor, customers. Everyone should own a piece of that which they care about, oftentimes a for-profit company. And I think that over time, over the next couple of years, it becomes truly a mainstream awareness.
That's incredible. And I think, So how does kind of Republic fit into, this kind of ecosystem? There's obviously the VC landscape, which has been very robust, especially, in the past 2 years or so. There's been an incredible amount of financing going on. Tiger Global coming from the top, micro VCs and solo capitalists coming from the bottom. How does alternative financing complement kind of VC fundraising?
Well, venture capital has only been in existence for about 4 or 5 decades. We assume that that's somehow unchanging, and that's not true. This is basically the first iteration of getting companies and ideas financed. So of course it is changing, like everything else in the world. But I very much believe that the top VCs will always bring a very unique value. That is the expertise, the network that they have, Sequoia, Kleiner Perkins, and Andreessen Horowitz. But there's a rising class of investor who bring tremendous value as well, which is, for example, a cohort of influencers who can help a company reach a wider audience. And therefore, their investment in the company is equally valuable compared to institutional investors. And of course, we have retail investors or retail capital, which means from your customers, and turn them into brand ambassadors. So it still go back to the narrative here, which is there are new ways of fundraising and bringing different values to a company, to a founding team, to an early stage business model. It used to be just institutional venture capitalists. And now you're going to see it coming from retail, coming from the community, and indeed, in many cases, coming from media influencers and micro influencers. So my prediction is that the definition of venture capitalists will expand. Those who are doing it in the same way right now, but at the very top of their game, will continue to have a place. But I think that the competitive landscape is going to heighten for venture capitalists overall, simply because it's now opened up to so many different types.
I completely agree with that. I think, I think in the VC landscape, we often talk about the death of the middle now, where, you really have to show, how much value add you provide, because, if a customer comes in, they're already providing value to the company as a customer. So it makes sense that they're an investor and they help, propagate your message. But, someone who's kind of on the outside just providing money, is that a value add anymore, especially as capital becomes commoditized?
I agree 100%. And people probably still haven't come to see a popular singer or a movie star, or quite frankly, anyone with a massive following. Now, that person, almost of any category, from sports all the ways to entertainment, can become such a powerful venture capitalist with such a huge ability to deploy. Say Beyonce, for example. She can invest $100 into a company and do that 1,000 times over. And each time she invests, she shares why she invests with her fans. And even if it's just 1% of her fans, each of them investing $100, I think I haven't done the exact math, but probably more powerful than some of the biggest name in venture. And she's just one of many top influencers that now have the ability to do so. So that's going to be fascinating to see how that's going to change innovation over time.
I completely agree with that. And I think that's why you see a lot more YouTubers and TikTokers coming into the space of venture capital. We saw Charlie D'Amelio invest. We saw Mr. Beast invest. So, I think that's going to be an incredible part of it. And I think the other part, as you kind of alluded to, was kind of this customer base kind of investing. I think Airbnb, initially wanted their hosts to come in to invest. And I think Uber might have said something similar as well. I think have you seen that kind of shift in a lot of companies' mind, especially as, you operate Republic, where there's a lot of companies coming in, who I think are allowing their customers to come in early and kind of invest with them?
Absolutely. And you know why? Because the consumers, the community members demand it. So Airbnb and Uber asked the SEC, which is the regulatory agency in the US that governs these things, they asked them for special permission to allow the users and the driver of Ubers and Airbnb to invest before the IPO. The SEC said, no, you got to use current law. We now have that product. But I think what it signals is that the next generations of companies, their own customers, their own users, their own community members will come to expect that they get to be owners early on. The first 1,000 users of Facebook added as much value as Peter Thiel, and they should have been able to have a skin in the game. Well, the next version of Facebook, the next generation of Uber and Airbnb, I think indeed will demand that. And we too at Republic, there's no question that we will also need to include our own users, our own community members into our equity financing in the next phase of our business operation and growth.
No, I think you're absolutely spot on there. You know, I think you mentioned Facebook. YouTube is another kind of example, but like the early users really dictate how that platform kind of evolves, but they don't have any skin in the game. They also don't have any governance, right, in terms of saying, you know, how the platform should go. And so I think, you know, companies like, you know, Republic is really kind of changing the landscape there and allowing for that and building the infrastructure where companies can do that now.
I agree completely. And I think that it's exciting because it's so much of an open sandbox, right? There's no quite precedent. Like, how do you, after you allow 1 million customers to become shareholders or stakeholder, what's the format for them to voice and for them to vote, and what implications it may have? I think that's why what we're building at Republic feels so exciting to me personally, that every day is a new day. Every step that we grow, every step that we move forward opens up new things to consider and to build. I think that's why the feedback and the engagement of the larger community, first in the US, but now globally as well, is something that is of core value to the team and I.
Yeah, I mean, let's talk a little bit about kind of the infrastructure that you've built, because in Japan, you know, there are crowd equity, you know, platforms, but you know, a lot of the initial complaints were, you know, the cap table management for companies is tremendously hard because, you know, you get 1,000 people or 100 people coming in, all those individuals are now listed on your cap table. You know, how has Republic kind of changed that with the crowd safe structure, with all what you do?
You know, it's helpful to have a legal background and to have a very competent internal legal team. So we put out new legal products that simplify the cap table, meaning investors aren't necessarily actual shareholders until there's a liquidity event. But you know, there's also new technology that, you know, needless to say, distributed ledger technology that can automate things like accreditation, identity verification, dividend payments. So I have no doubt, given another year or two, a company managing a cap table of 1 million people and making distributions out $2-3 per shares per investor, that's going to be as easy as us now sending out a mass email to 100 of our friends, literally with a few clicks. I mean, 20 years ago, you got to lick 100 stamps and stuff 100 envelopes. Now no one thinks twice about it. That simplicity of actual mailing to emailing, you're going to see the digitization of all things, but certainly cap table management and you know, investor relations of the future.
Wow, that is incredible. I can't wait for that future to come, and I'm sure Republic is going to be on the forefront of it. One thing I'm curious about with this crowd equity kind of side is a lot of kind of initial kind of the image of it wasn't always the best, right? Like I think it was always viewed as kind of a secondary thing to venture capital raising. And so, you know, how does Republic kind of change that image? And how have you kind of worked with companies to kind of convince them to go on the platform?
You raise a great point, and it gets better with time, but even now, there's still some misconception in certain circle. But anything that's new, anything that disrupts status quo is going to get some pushback, some resistance. And indeed, in the early phase, company that could easily raise venture financing would not look at retail fundraising because it's more time consuming and because they have to explain it to their board and their attorneys. But if you take a step back and look at a business that is consumer focused, if you manage to convince out of 1,000 customers, 100 of them that love your business so much they're willing to put money into you without getting any product back, how can that possibly be a negative signal? It should be absolutely a positive signal that you have product market fit, that you have high customer satisfaction, that you should receive the backing of institutional smart VC capital. And that's what we're seeing now. We're seeing companies that successfully raise on Republic and turn around, raise from A16Z, Andreessen Horowitz, Kleiner Perkins, Y Combinator. So I think the narrative is changing simply by just actual success story and how the venture capital world is very much embracing and view retail capital in some ways as a major validation.
I love that kind of idea of viewing it as almost kind of like a product market fit standpoint where people are putting in money even though they're not expecting their product back. I think that's a great way to kind of put it and a great way to pitch to startups. I'm, you know, in terms of kind of the benefits of fundraising from non-traditional, you know, institutions, you know, I think what do you think about kind of the competitive landscape out there? Because there's WeFunder, there's a few other kind of platforms out there as well. What makes Republic kind of special?
Yeah, that is a excellent and really hard question. So at the end of the day, there are certainly comparable business models that aim to do the different things, but we kind of focus on how do we deliver the best experience to founders and the best experience to investors. And ultimately, we have to let founders decide for themselves which is the right platform for them. So, crowd investing is such a new industry in that most people still do not know in the US that they don't have to be a millionaire to invest privately. Most people do not know that in the 90s of percent. So any other platform that aims to do what we do, we view it as a very good thing because they maybe reach and educate people who otherwise would not know about this. And then as they grow, I think we feature different type of deals. We have a different product experience. And obviously the team behind that is also very different, but it's up to the customer to decide why is Macy different than Bloomingdale's? Why would they go on Amazon to buy something and not go to Walmart? And I think that decision, we can only do our best to attract as many customers as possible. But at the end of the day, it's the decision for the customer to decide where to use their money and say that I'm most aligned with these people because of what I'm seeing and because of what they stand for.
I think that makes sense in terms of kind of helping, working with other companies to help spread the message about this kind of new form of investing. As I don't think a lot of people in Japan know that Japanese people can use Republic and can invest in U.S. companies. It's really kind of a global thing that you've built. Talk a little bit about kind of working in multiple countries. Working with the regulatory standpoint there.
So everything that we do when it comes to investing and fundraising, you're in the area of securities law, and I think most countries regulate pretty heavily how a company can fundraise capital from investors, accredited and non-accredited. The US tend to have very restrictive laws. So, as you just clarified, in Japan, anyone can invest in private securities. You don't have to be a millionaire. In the US, that's a very recent thing. So the way that we look at it is that up until very recently, we are a US-based operation, but we're an online platform. So if people come to us from other countries, we don't take a view and we don't actively encourage either way, but we accept investors who come to us from anywhere. Increasingly, we are becoming much more proactive in engaging with a country's regulator and market so that we can proactively replicate the model of Republic, hopefully in places like the United Kingdom, in Canada, in Mexico, in Korea, and hopefully very soon in Japan as well.
Amazing. And can you talk a little about some of the companies that have raised on Republic? I know a few because I've invested in a few, but some of you mentioned they've gone on to raise on Republic and then raise from Andreessen or from other kind of famous VC funds. But yeah, if you can talk through some examples.
Yeah, absolutely. I mean, two companies come to mind. One, for example, is a company called Gumroad, and that's led by a very well-known founder named Sahil. He raised already from first round capital, which is a very well-known VC. He then was raising a Series C, and he decided to raise much of that round from the retail community, leaving only 20% for institutional to invest. And so he raised the 80%, $5 million on Republic, I think in less than a day, and then raised the remaining amount from a few VC and well-known venture capitalists like Naval Ravikant. Imagine raising 80% of your round within a day on the platform. Not everyone can do that, but for the right company and the right founder, it can be very, very effective. I want to share a slightly different model, which is earlier last week, we rolled out the very first time a singer raised for a new song that he was going to put out. So this artist is a rapper called Lil Pump, Lilpump, and he raised a new song in collaboration with a very well-known rapper called Soulja Boy. They raised $500,000 in 2 hours, and investors, when the song gets sold and realize more and more in revenue, a percentage of that revenue gets sent back to investor via a security NFT. So they're going to receive dividend payment on chain. These are all the new things that I think represent what the future of investing would look like. Tech on the one hand, and passion, fund investing on the other hand, and the two will merge and overlap as it bound to be.
I'm ashamed to say that I missed out on the music one. I opened my email. I saw the Republic kind of the announcement. I tried to join in, but it was sold out immediately. So I couldn't join. But I'm hoping that you'll have more projects like that.
We'll have more projects across different verticals. Some are EDM, some are pop and rock, but often with very well-established artists and musicians, and some over time will be newer rising artists as well.
That's incredible. And I think with Gumroad, I think there was over 7,000 investors who came in, a lot of them with, $100, $500, $1,000 checks. So it's really, really small checks. But as you mentioned, he raised $5 million out of that, doing that. So that's incredible. I think one thing that I wanted to ask, I think that Sahil mentioned with Gumroad was that it doesn't get a lot of light, but one thing I'm excited about the Reg CF, it allows for secondary sales after 1 year after a 1 year lockup period. Can you talk a little bit about that and how that kind of allows for liquidity and almost acts like a mini IPO?
Most people may not realize, or maybe they do, that the difference between private investing and investing in publicly traded stock is that typically when you invest in an early stage company, you can't really resell the interest. So not until the company, go public or get acquired, that early investor would get out. It's called illiquidity, or the problem of your investment being illiquid, not realizable in cash. So in order to get everyone to be more warm to early stage investing, we have to fix that problem. Now, Republic, there's no question that over the next 12 months, we're going to give investors the ability to list and sell their private investment that they made early on Republic. It's called secondary trading or secondary product or services. And we absolutely believe that that's crucial, both for digital securities as well as for traditional securities, is legally complex. Tesoro is probably maybe too legally complex to explain in depth on a panel because it may take more than just half an hour or an hour. But because of our regulatory wherewithal and the depth of just legal, in-house legal, know-how, we're going to be able to do things that no one has managed to execute before, which is enable retail secondary trading at even $10, $20 among accredited and non-accredited investors.
I mean, that's an incredible thing to hear, and I'm very, very excited for when that day comes. I think, to wrap things up, Ken, maybe if you want to give kind of a message to kind of the entrepreneurs out here in Japan and Tokyo, who, are still a little bit uncomfortable with this idea of crowd equity funding and kind of this new form of financing and investing, talk to them about what it is to be, on a platform like Republic. What is the future of the democratization of investing?
If I may share an advice or a perspective for entrepreneurs and separately one for investors, the one for entrepreneurs would be, it is similar, but two different sides of a coin, is that if you're building a company, just know that in most cases, if not all that I'm aware of, whoever wins community will win that industry. And there's no better way to build and grow an engaged community by giving that community skin in the game, whether equity or different model, a token model, but you gotta incentivize a community by letting them be part of the journey. And if that's the case, then retail capital, fundraising from your own community or giving them equity is probably about the most valuable thing that you can do in building a household brand, if that's your goal. Now, for investors, I would say that your money matters. If you care about the future, if you care about a product, if you care about a technology or an artist, obviously put your money where your belief lies because it matters. And there's no better way of getting involved, of learning to do something by just getting involved. Don't invest a whole lot of money. If you can, invest $5, $10 worth of it and learn whether it's for you, whether you find it exciting enough, but definitely learn by getting involved and doing it rather than just by reading books about investing. And I think now Republic and other platforms hopefully provide the avenue for people to do that and not to do that with small amount of money that they can afford to lose. And over time, a percentage, hopefully we'll find investing to be a passion and to, contribute to the global economy and innovation in the decades and the centuries to come.
Amazing. Community and ownership economy. I love it. And I think, Republic is going to be a company to look to grow from years to come. So Ken, thank you for your time today. It was amazing talking to you, and thank you for your time.
Thank you so much for having me again. It's been such a pleasure, and really look forward to future opportunities to talk.
Awesome. All right, we'll see you.